Hello, everyone. Today we're going to review yesterday's session, NQ of May 20th, 2024. And I would like to show you, how am I approaching today, how I'm analyzing the chart, and which trade potentially, depending on your model, you could took, depending on time and everything. So the focus would be internal to external liquidity, because this is really helpful in finding the bias. And when I'm starting the day, I know how the weekly looks like. Nothing much, This is beginning of the week. Yesterday was Monday. We didn't have anything. It's like a brand new week. Yes, I'm looking at the week of the previous week, the high of the previous week, but I'm not expecting us to go that far at the beginning of the week, but let's see. Looking at the daily, what we see is that Friday was going into this fair value gap, right, on a daily level, and rejected higher of it, right? And this is like the first indication that we don't want to go higher. But again, I don't have any clear bias yet. I want to see, how the graph prints price and see, what's happening. So for us, this is like the internal liquidity, right? And if this is the internal liquidity and we're trending higher, our drawn liquidity should be the external liquidity resting up here. Okay, this is the buy side liquidity. We can mark it as the drawn liquidity, right? And this would be their idea. The goal for us to get on Monday from this internal liquidity to the external liquidity up there. This is ERL. And as you know, we go from internal to external and from external to internal. And this is on the daily, right? But we see that we didn't touch the consequent encouragement of the fair value gap on the daily level. And if we drop down to the 4 hours, we can actually see that there's a smaller fair value gap that we rebalanced completely, right? And this is another indication. Again, internal to external, we see that the lower time frame is aligned with the higher time frame. We rebalanced this fair value gap and closed above the consequent encouragement. So it means that we pose to go higher. And again, this is like end of Friday. Now, from the 4 hours, we go into the 15 minutes, right? And again, this is the 4-hour fair value gap. Let's fix that because we changed the framing of it. We started the day inside the fair value gap above the 50%. And this is the end of the session on Friday. Let's move forward and get to the beginning of the New York session, right? This is the beginning of the New York session. What we see on the 15 minutes, again, from the 4 hour to the 15 minutes, we see a fair value gap here, right? A big one. And this would be, depending on your model, a way for us to go in for a long. But this would be a little bit more risky. But again, this fair value gap is good because based off this fair value gap, we swept this high. So it should hold. And this would be your first entry. But again, I'm not expecting you to take this trade unless you're very, very advanced in your trading. But we should wait from the 15 minutes. Once we tap this fair value gap, we want to see an entry. For us, like if we focus on the 4 hour, 4 hour give us like the bias, the 15 minutes give us the signal that, we're good to go for taking a long. Like once we touch this fair value gap and rejecting from it, our entry can be on the 1 minute. This is time frame alignment. 4 hour, 15 minutes, 1 minute. So once we drop into the 1 minute, we can find our actual entry. And I confused you. This is before the session. This is where the kill zone started. But the session only starts on 9:30. But we already tapped this fair value gap on the 15 minutes. And again, I encourage you to wait for the session to open to take the trade. Because look, let's say you take your trades on the kill zone open on 8:30, right? And you see this rejection from the fair value gap, and you see this inversion fair value gap. And if you took the trade, you've been stopped out. Because the session didn't started yet, and we tend to take liquidity once more once we take the session. We start the session. So I would wait for 9:30 before taking any trades. Again, time is a very important aspect. You know that. And you see that we start the session. The first thing that we do at the beginning of the session, we're taking liquidity from the downside. We're completely rebalancing this 15 minutes per value gap. And this is our time to take the trades, right? And we see that we have another fair value gap, a CB, right, on the 1 minute. And this would be ideally our first entry, depending on our model, because this fair value gap swept the liquidity from before the session. You see smooth edges down here. And we swept the liquidity. And this would be our first entry. A fair value gap that's pushed us to sweep liquidity and then inverted. This can be our first entry. And this is a little bit more risky, but again, depending on your model, this would be a nice trade. You can take it up to 1 to 2. You can aim for our drawn liquidity. If you aim for the drawn liquidity, this would be insane risk to reward 1 to 9.3. But again, this would be our first attempt. But again, the graph moved very, very fast. And as you can see, it ran. Sometimes you would chase price and this would be nice. And you took a trade and graph went to your take profit. But sometimes, you see a retracement go back to your stop loss. And what we do right now when we wait for another entry, right? Where is the other entry? So I'm looking at the highs or the order blocks that pushed us down. This would be a retest of them would be a way to go long. So potentially this would be a retest of this high would be potentially an entry for us. Once we do a retest of that. But we didn't do that, right? We went straight up. The next one would be either this one or this one. And I'll explain in a second why, okay? And see that we're not stopping, we're going straight up. Why am I okay taking a trade right here? Let's remove this one. This one is a good entry because if you think about it, on a higher time frame, this is the 1 minute, on a higher time frame, what do we have here? a move down to take liquidity, and then a move up to take the other side of the liquidity. So what do we have here around this area, this consolidation? Right, this is a breaker block, right, on a higher time frame. So if you mark this push, in a way, this is your breaker block, right? This little consolidation from here to here. So this is a breaker block on a higher time frame, and again, because this is a breaker block on a higher time frame, this would be your ideal entry, in my opinion. And as you can see, we got our entry. So our opportunity would be taking along from here. Stop would be beneath the breaker block. And again, depending on your model or preferences, you can aim for 1 to 2, 1 to 3, whatever. And if you aim for the drawn liquidity, this is 1.6. And again, no drawdown, going straight up, almost take profit, a little bit consolidation, but after a while, we got our take profit, and this was nice. So just to sum it up, on a higher time frame, we had external to internal liquidity. No, this is the daily. We went to the 4 hours. We had the same alignment, external to internal to external, right? From the imbalance or fair value gap into the sweeping of the highs. And then we had three entry options, right? One on the intermediate time frame on the 15 minutes once we tap this fair value gap on the open. The second one, once we inverted this fair value gap, this is a little bit more risky, but the low risk, high probability entry would be once we retest this breaker block on a higher time frame, right? And if we look at the 5 minute, maybe it would be easier to spot. As you can see, this would be our breaker block. Sorry. You can refine that and improve your risk to reward. This the last upload candle before the move down. This would be your breaker block on a 5 minute time frame, and again, a nice trade. This is 1.8. Easy. Easy, easy, easy. Not all the days are like this, but again, wait for the perfect conditions. And now I want you to look at another thing. If you go back to the 4 hours, what do we have here? Again, we didn't do that, but again, and before the session starts, go and open the 4 hour. You can see that inside the 4 hour fair value gap, we have another fair value gap going higher, right? And this is another great sign of bullishness, I would say. And this would be for a potential entry, taking a long from this fair value gap inside the bigger 4 hour fair value gap. And this would be another entry with insane risk to reward. And this is why I really, really, really love the concept of internal to external liquidity, because this is really helpful. Again, now that we swapped the high, we're going to go to the internal liquidity. That's it, guys. Thank you very much. If you like the video, like and subscribe. And if you have any questions, please leave a comment. Thank you and see you next.